Good afternoon, everybody. This is Hunter Mozingo bringing you your daily market insight video here on Thursday, May the 12th, a little under 15 minutes after market close here in Jacksonville, 4:13 p.m. Eastern Time, to be exact, as I'm recording this video. And today we had about as wild a day as you can have in the markets, or about as wild a day as we've seen in regards to this intraday swings. We've had 2 and 3% up and down moves in the Qs. Multiple of those in this one day of trading. So some pretty wild trading today. But we're also going to talk about the two tech titans that have been exemplifying the weakness that we've seen in stocks, or magnifying it, however you want to look at that. So we're going to look at those a little bit later in the video. But first, let's get through the basics. Let's talk about some of the stuff that was up, that was down, how the indices fared today, all that good stuff. So let's get into it. What just happened? A brief rally attempt this morning, right off the lows, stalls, wild volatility continues. And so if you go to the performance here, you can see we actually did not close all that bad whatsoever on the S&P and the Qs, but this does not tell you the full story. The Qs at one point today were up 1.5%. They were also down nearly 3% at one point, or around 2.5%. S&P, same kind of story, was up 1% at one point in the day, down nearly 2%. So all kinds of wild swings, but you end up finishing relatively flat, for lack of a better term. The G6 actually showing some strength. A lot of the names that have been absolutely decimated, the ARKK type of names, meme stocks, that type of stuff, was up relatively big today. So G6 up 1.8, S&P down a little over 0.1%, QQQ down about 1/4. Dow down 1/3, mid caps up a little under 1, Russell 2000 up about 1.2 or up 1.24, 60/40 slightly green, up 0.07, and grow just slightly red today, down 0.08. So again, market state and trend are going to stay the same. There's no changes there. All down on the trend gauge, and market state remains in correction. So no changes in that regard. And then, as we normally do, let me quickly highlight Revere and mainly just my email here. If anybody has any questions, comments, concerns, whatever it is, regarding the video or anything else, please don't hesitate to send me an email. I will happily respond to you all. Or if you're interested in what Revere does, you want to talk to somebody else, you can email anybody here, Dan, Tim, Merrill, or Don at revereasset.com. So let's go ahead, get right into it, into the tail of the tape. And it is a wild tail of the tape today as well. So headwinds remain the same. Sentiment, we saw the CPC, or the put call ratio, spike up early this morning to around 1.7. That's as high as we've seen it pretty much in quite some time. Ended up settling around 1.25. The VIX actually got up to around 35 today, but ended up closing just under 32. And the fear and greed is now at a 6. So still in that extreme fear category. So that's about as low as we've seen the fear greed index since the COVID crash. So the sentiment certainly moving up in regards to the fear, panicky type of stuff. Still haven't really seen the VIX have a big blowout move like up into the 40-50 range, and we may not see that, but it's been hanging out in this 30 to 35 range for quite some time now over the last couple of weeks. News-wise, PPI came out in line with expectations essentially. Didn't really impact the markets all that much. Pre-market, we were down out of the gate, so that was we kind of just stayed around where we were when this announcement came out. What were we watching? Would the S&P get up to this 3960 level and be able to get through it? And the answer was we failed at resistance, but we held at support, and that support level is that minus 20%, roughly 38.55. We got within 4 points of that today. So we were down not 20%, but 19.92%. So about as close as you can get to being in a bear market on the S&P as you can get without actually doing it. So real close, but support held technically. That minus 20% level, we kind of stayed in that range, which is a wide range for the S&P, but nonetheless, it held. Now to the action, which is really going to highlight for you all how crazy today was in regards to a lot of the swings and the moves. So we open up down about 1% on the S&P, move down a little bit lower, and then we go up 2% off the lows in just a blink of an eye to 39.64. Then we go 2% down to 38.89, back up to 39.30, down to new lows around 38.60-ish. And then we have another 2% rally to close. So you open up down over around 1%, you go up 2%, down 2%, up 1%, down another 2% roughly, and then another 2% rally into the close. So just a wildly, wildly, wild, volatile day to sum it all up. And I'm going to show you guys a 5-minute chart here while we're on the action part of this. And this is the S&P. So as you can see, we open up down about 1%. We even move down a little bit lower, and then you get this quick rally up that ends up for about an hour here. We end up going from 38.77 up to 39.64, and then you go in a straight line down to 38.89. That's about a 2% move here over the course of about 45 minutes or so. And then you have a brief little rally up here, and then you continue down to new lows on the S&P. Like we said, within just a little less than 4 points from reaching that true minus 20% level. And then we ultimately failed to really push lower and have this face ripping rally into the close here, up about 2% off the lows here as well. So a very, very crazy day in regards to the volatility. That's not something you see all that much on the S&P, the way that just up and down 2% like that. But that was what we saw today. Notes wise, this was the overnight range on the S&P, which was where that first low was initially. We ended up pushing through it. Like we said here, we opened up down around 1%, closed almost flat here on the S&P. G6 up about 2, 60-40 slightly green, grow slightly red. Sector-wise, dollar continues, bonds were slightly up. G6, as we noted, home builders, biotechs, retail, and software stocks, Sky here, up a little bit today. A lot of those beaten up names that have been crushed, like we talked about, having some relief today. Oil's down a little bit today. XME, that's your metals and mining, airlines, gold, silver miners, and some of the shippers also having a bad day. So pretty much a mixed bag. And really the sectors that had been hit the worst, like G6, home builders, biotechs, those were the ones that were showing some strength today. Portfolio wise, beta cut in half, 0.2 to 0.11. Still have a very, very large cash position. We ended up selling CVX and trimming S&P 500 exposure. So bottom line, wild volatility remains. It's a dangerously fast market. As I just showed you on that 5-minute chart, you blink your eyes and the S&P or the NASDAQ could be up or down 2% in a matter of 30 minutes, 40 minutes to an hour. And that's just not necessarily normal. But then again, this isn't necessarily normal circumstances. We're down nearly 30% on the NASDAQ. We're approaching 20% on the S&P. So that some of that volatility is to be expected, but it can make for some very, very wild swings like I just showed you there on the 5-minute chart. So moving along here, prior close 39.35, we closed just 5 points below that today. And like we said, key point here, S&P was down 19.92% at the lows, just shy of that bear market, pretty much right in line with that minus 20% level that Don has noted on the tail of the tape as a potential support level. And so that's that 38.55 right there. That's what we're talking about. We got down to 38.59-ish basically today. So let's get into the chart. We already touched on the S&P, but I will highlight this very quickly. At the lows today, we were about 11% below the 50-day. That's about as stretched to the downside as we've been in this whole downturn since the start of the year. So both of these days here, we got to about 9.5%-ish. Now we're kind of extending that a little bit, down 11% at the lows today, but we got that vicious rally up about 2% off the lows at the close. Ended up closing at about 9.5% below the 50. So as you can see, we still can't even really make a good challenge to get back above the ADMA. Maybe that changes soon, but this 4,000 level tried to act as support, but really that did not last very long. And we haven't, since this 5-4 Fed day, haven't been able to make a really sustained move to the upside whatsoever. Anything that we've had has been very brief on an intraday basis and usually has been fleeting. So moving along here to the Qs, which are obviously going to be more extended to the downside. Low today of right around 285. So that 300 level did not really act as support all that much, similar to what we saw with the 4,000 level. And in the same sense, we have not even really been able to make an attempt to get through this ADMA. Not much of a rally attempt whatsoever since this 5-4 Fed day. Again, we were up off the lows nicely this morning. The Qs went from 285, 286 range all the way up to 296, so a 3% move off the bottom. And then here, we'll just look at a 5-minute on the Qs too, because it's going to look about the same as the S&P, but a little bit more volatile. So down to 285 here, That's 9:40, 10 minutes into market open, up to 296 here about an hour and 20 minutes later. And then you go from 296 all the way to 288. So a nice 2.5% down move real quick. And then you continue to move lower before a nice rally into the close here, up about 2.5% off the lows from 285 to 292 roughly there on QQQ. So volatile everywhere you look. QQQ doesn't matter which index, but again, we are very extended to the downside. So keep that in mind. We're 13.5% below the 50, 15% below the 50 at the lows today on the Qs. Again, that's more extended than we have been this entire year as far as below the 50 days goes. So we are continuing to be stretched to the downside. However, that has not stopped stocks from continuing to be weak. So let's move along here quickly to the Dow. Losing this previous level of support here, where it looked like maybe we were going to hold up for a little bit, ended up pushing below that, just like we saw with all the other indices. And again, closing well off the lows, and pretty much all of that coming in the last hour of trading today. So we're going to find out very soon whether or not that was just some short covering into the close, or if there's a possibility of a more sustainable rally coming. And then lastly, IWM and MDY, which were the ones that were nicely green on the day. Again, still not pretty, have not been able to make an attempt to even get over or challenge this ADMA since the 5-4 Fed day, but maybe a little bit of progress today, up about 1.5%, 1.25% on IWM, and then MDY up about 1%, as you can see here. Again, trying to maybe find some support, maybe have a rally attempt, but since this day right here, it has pretty much been a waterfall with any strength being sold into. That's the key takeaway here on the indices, is any strength from the last week or so, week and a half, has been sold into heavily. Maybe that's about to change, but for the time being, that has been the case, even though we did get a strong finish today on the indices. So let's get into some of the stuff that had a good day today, and I'll show you ARKK. And this is a tough chart to look at because it has declined so much, but this is the type of names that were having big days today. ARKK up 6%. And what's pretty interesting here is about an hour before the close, ARKK was up 1.5%, ended up adding an extra 4% into the end of the day there. So pretty vicious move there for ARKK. And just to highlight some of the names in this that are kind of the ARKK type of names: Rivian up 18%, AppLovin, which did report earnings, but they're up 35% today. Unity, which got absolutely crushed on earnings, just yesterday, up 16% today. Roblox up 20% today. So these are the types of names that we're having the big days today. Maybe it's short covering, maybe it gives room for a further rally, but a lot of the ARKK, the meme names, were up big today. Sector-wise, we touched on it on the tail of the tape. ITB up nicely today. You have interest rates coming down a little bit. Home builders, they're probably going to like that. XBI, biotech, which have just been absolutely crushed recently, up 3.5% today. And then XRT, retail ETF, also has been crushed, as you can see, up about 3.5% today. So there's some of the positives from sector world. Now let's move along to some of the negatives. So Bros, a coffee company that we've talked about a good bit on the show, as well as in our videos, down 27% after reporting earnings, did finish off the lows, which were right around 20. But this is just another example of stocks, especially growth stocks, just really getting crushed recently. Unity was down 30-something%. Upstart basically was cut in half earlier this week. So this is a recurring theme that we've seen. Another recurring theme we've seen is crypto have a really tough go of it. And this is evidenced by SI basically getting cut in half in the last 5 trading days, right? So just over here on this day, 5-6, so 1, 2, 3, 4, 5, from 120, almost 115, to a low today of 56. So about a 50% decline here in SI over the last 5 days. That is pretty crazy, but that's reflective of a lot of the craziness we've seen in the crypto market. We also saw airlines struggle today. As we mentioned, Jets was down. United was down about 6% at the lows, finished down 4%. Delta also down about 6% at the lows, finished down a little over 3%. So airlines struggling today. Arch, which we talked about on the podcast not very long ago, down about 6% today. This is one of those commodity-related names. It is pretty volatile. but it had a big down day not too long ago as well, after it looked like it was possibly setting up down about 10%. So really, not really any particular area of the market that was safe today. Doesn't matter, staples, utilities, that theme kind of continues, as the weakness can really leak over to any phase or any area of the market. So now let's talk about the two tech titans that we've mentioned, or that I talked about in the beginning of the video, that have really been kind of a drag on the indices. And those two names are the biggest names in the market. They're Apple and Microsoft. And what I want to talk about here, and I've been talking about this, is Apple had started to live under the 200-day. They reported earnings, and it looked like, oh, okay, maybe they're starting to rally here. And that got quickly shut down. And this was really kind of what gave way to this quick decline. So Apple is down about 13–14% to the lows anyway in the last 6 or 7 trading days. But this day right here is down 6%, obviously much more than the market. Yesterday, it slices through that 150 level of support, big psychological level as well as technical level, sliced through it with ease, was down about 5.2% yesterday. Obviously, again, more than the S&P, more than the Qs. And then even today, it did finish well off the lows, made it all the way down to about 139, but still down almost 3%, while the S&P and the Qs were flat. And so the point I want to make here is that Apple and Microsoft, which we're about to look at, for the better part of 2021, they were helpful to the indices, meaning there was a lot of days where they were up when the indices were down, or they were up or down less than the indices when the indices were down. We're starting to see now where they're a source of liquidity for distribution, and they're acting worse than the indices. They're a drag on the S&P, they're a drag on the Qs, as opposed to being a help. And that's what they were for a while. And you can see that Apple was one of the last stocks in the market to go below the 200-day, and it's starting to accelerate a little bit. So that's what I want to highlight here. Maybe that turns around, maybe Apple can stage a bounce here, because this is very extended to the downside for Apple, but it's been extended to the downside for the last couple of days and really has not been able to muster any strength. Perhaps that changes. I mean, we've had a very sharp move down. I mean, almost a $17 move here in 2 days from high to low on the Apple here, but just really not encouraging action on the biggest stock in the market. And then Microsoft, which is not far behind it in regards to market cap, same kind of thing here, down about 13% or so since the Fed day, down about 3.5 yesterday, down 2 today. And the point I want to highlight is these are the biggest stocks, and they're dragging on the indices. So down 2% on a day where the S&P finished almost flat, Qs finished almost flat. They were down more than the markets yesterday as well. So that's the point I want to make, is these stocks have very big market caps, have big weightings in the S&P and the Qs, and they're not being friendly to those indices right now. Like I said, that could easily change. These are big support levels, 250 on Microsoft, a big psychological level, as well as a big technical level. And then where Apple bounced today, 138, that's a big level too. As you can see here, looking back to this high, this resistance here, and then this low here. So these are big levels. Maybe they can stage a bounce off these levels and possibly rally back up into declining moving averages. But for the time being, they're dragging on the indices as opposed to helping them. And obviously the rest of the big tech names, not necessarily helping today either. NVIDIA down 2.7. Google continues to be an underperformer too. Actually, this one finished a little bit more in line. But Apple and Microsoft, the two key ones I wanted to highlight today. And then sector-wise, last thing here, gold miners really just absolutely fallen apart from 41 to 30 over the course of the last month or so. XLK, which was actually down a lot more at the lows, but still a laggard. This is dominated by Apple and Microsoft, so that's a good representation of those two names kind of together here, down 1% today. And then lastly, XME, like we talked about, metals and mining typically kind of goes hand in hand with the gold miners, but down 2% today, obviously, again, lagging the market. So that is going to wrap up the video today, everybody. I hope you enjoyed it. If you have any questions on anything I covered, again, as always, feel free to email me, hunter@revereasset.com. I will see you guys on the podcast this weekend, and hope you guys all have a good weekend, and I'll see you again on next Monday's video. Thanks, everybody.